All right. What is up, traders? What's up, tycoons? In today's video, we're going to be talking about gold and how I think that gold could be due for a large pullback over the coming months, right? Heading into September, October. And we're going to break down why. Now, this is the chart right here. It's not just because we're testing three key levels of support. And if we break those, that's going to be a big deal. But gold is very tradable, right? And a lot of these moves fall in line with seasonality very well. Back here in May, everyone was screaming how this was a double top. Okay, and in the Discord, I was telling members about how most likely this is going to turn into a false top and we're going to head into new highs. And that's exactly what we did, right? Is we ended up creating new all-time highs through that classic plumber's pivot pattern. Now, we'll break down that pattern, what it is, but essentially it's a false top where bears look to get a squeeze and a flush to the downside. Okay, but rather than getting a flush, they end up getting squeezed out. And as you can see, it happened yet again, and we came up to new all-time highs in gold. Now, seasonality is not very strong for gold. We'll break that down. Also, the dollar is back to being a headwind. Okay, we had this divergent period here since about February in the beginning of the year where the dollar and gold, their normal relationship was not intact. Over the past 20 days, we've come back to that relationship being intact. We'll break down what that means, especially when you look at dollar seasonality and how we're heading into a seasonally strong period. Now, we also got a sell signal on my custom buy sell script. We'll take a look at that. You see these periods here that headed into September, October over the past 2 years, and they were very red periods for gold. And here we are again today, this week, getting that sell signal. All right, and then we'll come back to the gold chart and break down the key levels to look for where there could be potential support or, to buy a dip, or if you're someone who's interested in shorting, maybe some targets to the downside. So it's going to be a good video. We'll get right through this one, go over the bearish divergence and the bearish crossover we have here as well. Be sure to smash the like button and subscribe to the channel if you guys are new. But as always, the content provided on this channel is for informational and educational purposes only and not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new, I started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance and trading related content. And I also try to sprinkle in free trade ideas in there as well. And the trade ideas have been working really well lately. Now, there is a website associated with it. You can go back and for free just read all of the previous articles and newsletters that have been published and see if it's something that you guys want to sign up for. If it is, well, then you can subscribe and get those sent directly to your email inbox. Now, you can join the Investment Intelligence private trading group using promo code SUMMER. Okay, that'll get you your first month for just $1. All right. I forgot to do a 4th of July sale. I just really wasn't active on YouTube and social media for that whole time period. So I'm gonna go ahead and do a promo code for the rest of the summer, letting you guys join for $1 for your first month, and then after that, you'll pay the regular monthly fee. Now, what's inside? You get 20 plus swing trade ideas every single week. A lot of the charts that we're going over today were just some stuff that a member requested, and I thought it would be some good content for a video for you guys. There's also custom scripts and indicators, exclusive intel such as unusual option activity, dark pool data, gamma levels, much more. And there's also exclusive chart layouts in here as well, such as one of them that we're going to go over using that custom buy sell script. Now, this is our chart that we're going to start off with here, okay? And this is gold. This is a weekly time frame chart. And there's some things that I want to show you guys, okay? The first thing that I want to show you guys is how right here, this circle right here, we have three different things aligning together, right? And what are those three things? Well, we've got a 50 SMA, right? This is your 50 simple moving average on a weekly time frame. All right. Then we've also got the support trend line that we tested here, and here we are again. So now the big question is what happens here? Does this hold as support, or is this going to be an area where we see a flush to the downside? All right. Very, very important to pay attention to. Now, could we bounce here and then break through those? Yeah, that's very possible. We've got PCE coming in tomorrow. Likely that is going to affect gold and move gold, cause some volatility in there. Okay, but the key levels, right? We've got our first Fibonacci here, very big support level. Okay, then we've got the trend line, and we also have the 50 SMA. All three of those together are three key critical levels that need to hold. Otherwise, gold could drop lower. Now we'll get more into the technicals and what to look for later in this video. But as I mentioned, a lot of people were talking about this double top forming here, right? And you have to remember what market you're in. If you're in a bull market, a lot of times you're going to see bearish setups fail. And so when I saw this double top and everyone else saw it too, forming, a lot of people were just automatically assuming that we were going to flush to the downside. But as I mentioned, I was really looking to see, right? I'm saying watching to see how this develops and if it turns into a real double top breaking the neckline, because that's what a double top is, right? Otherwise, it's just overhead supply and resistance. But once you break that neckline, that's when it becomes a double top. And I was saying, or if this is going to potentially turn into a plumber's pivot false topping pattern and we see a move back to new highs. Now, here's gold right here. Okay, and essentially what you see each time that this pattern occurs is going to be very simple, right? So we have support here, we have support here, we have support here, and what do we get? We get an oops right here, right? Where support breaks, and this is where bears get aggressive, right? Because now we're below support. They're going to put a stop loss above the top of support there and look to target and get new lows to the downside, and they get aggressive during this period here. And once we reclaim support, right? Once we reclaim support and demand, they get squeezed out. Okay. And so this false move, this false breakdown here turns into a very fast move, right? And we see that time and time again, right? We've got support over here. We come down, test support again. Bears are looking for us to flush through support and they don't do it. And that is what the plumber's pivot is all about. And the same thing happened here again recently. And you've seen this pattern time and time again. Look, guys, this is since 2021. Now, some of them are longer periods, right? This was a really large one that really kicked off this entire move over here. And then we have a little bit shorter right here. And then we have a little bit of a shorter one. And we have a little bit of a shorter one. But gold has been in a bull market going, GLD specifically, going from 148, okay, up to 228, over the past 3 years, over the past few years. So remember that, okay? So even though we're talking about some bearish setups here and scenarios, it doesn't necessarily mean that gold is going to crash 50%, and we're not calling for the end all be all of gold or GLD. Now, what is the thesis, right? What is some of the things making the foundation for the thesis? Well, one of the things that, suggested that gold could go higher was the seasonality for July. Look at the seasonality for July. This is the beginning of July right here. And look at how bullish it is, right? Heading into July. Look at what we've done right now. Okay. July was very bullish. We peaked a little bit earlier, but we did come in here and make some new highs. Now we're starting to roll over here and we're heading into a seasonally weak period, right? Where gold typically makes a high, lower high, lower high, a low, and a lower low, right? So that would be a textbook downtrend, right? So does this mean this has to occur? No, right? Seasonality is not something that's going to 100% predict the future, but it is something to take into account and help build a thesis, right? And so if we move forward with the thesis and you take a look at the relationship that the dollar has with gold, so the green line here is actually going to be the inverted dollar. So this means that, gold and the dollar typically have an inverse relationship, right? So you see the green line going up. This means the inverted dollar is going up, meaning the dollar is going down, and gold is going up, right? And you see that they follow themselves very, very closely, right? It's not going to be exactly one-to-one, but they follow very closely. And here we have this divergent period. Now, one thing I do want to note is that whenever whenever the dollar and gold, right, are not displaying their normal relationship, gold is always a benefactor, right? So you see them moving very similarly here, the inverted dollar, and then we have this period here where they're moving differently, right? We have gold going up, and then we have the inverted dollar going down. Okay, gold is the one that always benefits throughout these inverted periods here. Okay, and then what do we see? We see the inversion ends, right around over here. Okay, and we started to see the inverted dollar drop back down, and we start to see gold futures drop back down. Well, what did we recently have? We had another inverted period here where yet again, or I'm sorry, a divergent period where we're seeing the inverted dollar going down and we're seeing gold going up, right? That's typically not what we see. This is your typical normal relationship. And once again, gold was the benefactor. Now, whenever it's the benefactor, whenever that divergence is occurring, but whenever that divergence ends, oftentimes gold starts to follow the inverted dollar back down. Okay. And over the past 20 days, we've seen, a bottom at the same place in the inverted dollar and gold. We've seen a spike and then we've seen a peak in both of those. And now they're both heading back down together. So if the inverted dollar is going to continue rolling over here, gold is most likely going to follow suit because it very much follows the status and the price action of the inverted dollar. Now, the dollar is seasonally strong right now. Okay, so what we're basically saying is that they have an inverse relationship between gold and the dollar. So if the dollar is seasonally strong right now throughout this period heading into mid-September, we see that it typically rips throughout this time period. That's going to be a huge headwind for gold, right? And when we go back to the seasonality chart for gold, we see that gold typically is weak here heading into mid-September. Okay, so using seasonality, using the dollar as a gauge and as an indicator, it does suggest that gold potentially can go lower, right? Now, what about the charts? What do the charts say, right? Are there any other indicators that we can look at? Well, I've come up with a new buy-sell indicator here recently. All right, and we can see that there have been false signals, right? Over here, and over here, and over here for sell signals to the downside. So this indicator hasn't been the most reliable as a sell signal for gold. But if you think about it from a risk reward multiple, right? These trades are typically wrong, right? The sell signals are typically wrong within 1 to 3 weeks most of the time, 4 out of 6 times over the past few years. But when they're correct, you see gold has a long extended downtrend throughout those periods, right? Here and here. Now, let's ask ourselves a question. What time periods were these in? Well, if you take a look, we have July over here and then October. We see that these bottom out around October in that October-ish period. So does that align with what the seasonality is telling us? That we could have weakness in gold heading into September throughout mid-September and potentially see a bottom in gold in October? Yeah, it does. And we're right back in that same period right now. And we just got a fresh sell signal right here. So that's going to be really interesting to see how that develops. And, if this plays out again, where we go through a multi-month period or an extended, 4 to, 10-week period of a downtrend in gold and in the GLD ETF, that's something that I'm really going to be paying close attention to. Okay. And when we dive even further, right, and we take a look at this, we've got bounce here, and once again, we're retesting this trend line. Now, I know we went over this trend line in the beginning, but this is a key important trend line. Look for this to happen. Potential break, retest of the trend line, move lower, maybe a break, retest of the 218 level right here, and then a move lower. Right. The big thing is that if all three of these, right, the 50 simple moving average right here, right, the trend line, and our 218 level right here, if all three of those become overhead resistance, that's going to be a major tailwind for gold. Combine that with seasonality and combine that with that sell signal during that seasonally weak period. And all of these things are setting up for a potential move lower in gold. Now, what are some areas to look for to the downside? Well, you've got the 382 Fibonacci right here at 211.5. There is a small demand zone here, okay? If you take a look, what did we have? We had old resistance, became new support, became new support, became new support again. If we're to come back down and test this area, it wouldn't surprise me if we were to get some type of a bounce. Now, does that result in something like this, where we potentially, bounce, consolidate just to move lower and flush through again? Yeah, maybe that's the case, right? If things are really bad in gold. But for right now, we're not going to jump the gun. I'm being patient. I'm waiting on this. But this does look like a potential short opportunity. Now, if we break below the 382 Fibonacci, okay, that's going to indicate that this uptrend is losing some of its strength, right? If you bounce off of the 382, that indicates a very strong uptrend, okay? If we come back down and break the 382, we have our 50% retracement level here, right around 206. And this would basically just indicate your average trend, okay? Your average trend, it's not going to be the end of the world. So if we do happen to break through 211, 206 is a really good area to potentially look as another buy the dip area. These are all going to depend on your own risk management, on your own time horizon, if you're someone who's looking for areas to where to buy gold. And then you've got your 618 extension right here. This is going to be an area where we'll look to see if we can turn old supply, right? Because we had resistance over here, we had resistance over here, and then we've got the Fibonacci level right here at 201. We'll look to see if we can turn that old overhead supply potentially into new demand. And this is going to be right around your golden pocket at that 61.8% Fibonacci level. So, those are really just mainly the three key levels I'm looking at to the downside. If we flip all three of these, which is going to be the trend line, the first Fibonacci level right here at 218, and our 50 SMA, if we break all of those three levels are going to be the key levels and areas that I'm paying attention to the downside. Now, we've got a bearish divergence here on the chart. Okay. And if you're not familiar with that, just take a look how we have a high and we have a high. So we have higher highs, and then we have a divergence where we're making a high and then a lower high here. And we're below 50 on the RSI. So below 50 is not a good look. That means we're losing a lot of momentum. We have a bearish divergence, we have bearish seasonality, and we're getting a sell signal on a custom indicator. All right. You combine that with a bearish crossover on the MACD, and all of this is setting up for a potential really nice short trade. Okay. Now we have to remember that, what happens if we come back down here and we test demand? We don't want to get overly excited or overly ambitious with any shorts, because guess what could happen, right? Let's draw some things in here and draw in a potential scenario. Let's say we do something like this, right? And we come down and boom, we're over here. Well, what could that potentially form? Again, another larger plumber's pivot, okay? Where we have a top, bears are looking for an overly aggressive move, let's say all the way back down to here. And what happens instead is we end up, getting a liquidity grab. Bears get overly aggressive to the short side, and then they get squeezed out once we reclaim demand and support, and we see a rapid move to the upside. All right. So as I mentioned, it is setting up for a really nice short, but you want to keep in mind that we are in a bull market. And oftentimes we will see bearish scenarios fail. Okay. This doesn't mean that they're always going to fail. Okay. But you just want to know what environment you're in when establishing a trade, and knowing, where you want to take profits at, where you want to manage risk at, and different things like that. So hopefully you guys enjoyed today's video and learned something new. If you enjoyed it, like and subscribe. Don't forget to share the channel. Okay, help me get to 10K subscribers. I'm almost there, not very far away. Don't forget to join the Investment Intelligence private trading group. Using that promo code SUMMER, that'll get you for 1 month free. You get your first month free, and then after that, well, not free, but for $1. And then after that, you guys will be able to, just pay the regular monthly membership fee if it's something you enjoy and want to stay a part of. If you like the analysis in this video, you're going to get tons of that every single week inside of the Discord. There's 20 plus swing trade ideas every week, custom scripts and indicators, exclusive chart layouts. This one right here that we went over, this is one of the new chart layouts that I've added that's got the custom sell indicator on there that'll flip the candles from red to green, from green to red based on the signal, right? And there's much more inside of there as well. So hopefully we'll see you guys in there. You can sign up for that newsletter. Okay, that's completely free. You don't have to pay anything to access that. And if you ever want to do a coaching session or a one-on-one session, you can book those directly through my Ko-Fi page. There's a link in the description to take you to the Ko-Fi page. Just click on the commissions tab, and in there you can book a 30-minute or a 1-hour coaching session. They also have a really cool buy a coffee button, basically a way to leave a tip or donation for all the free valuable content I put out, such as the newsletter and these free YouTube videos. Thanks again for watching, and I'll see you in the next one.